You've been on YouTube recently, you've probably seen stuff like when's the next crash, this will predict the next crash, what to do in the next crash. I thought let's view it from a crypto perspective because a stock market crash should in theory really impact cryptocurrency. So in this video I'm going to break down what a stock market crash means for crypto and where does it leave it essentially. Remember, this is Quantum Research, it's not financial advice. If you do want to keep up to date with markets from a crypto perspective as well as a stock market perspective, I do have a free newsletter. Link to that will be in the description. Crypto is difficult to value. Value investors obviously don't like it. There's no earnings, no cash flow, no PE ratio. There's none of these frameworks that value investors can use. There's no fundamental anchor in the same way. This makes it harder to say where fair value is. People could make the same argument with gold. There's no cash flow from gold. How do you value it and all that stuff? So with a stock, you can argue it's cheap or expensive relative to its earnings. Crypto is driven by adoption, sentiment, liquidity, which I think is one of the main drivers. If you look at global liquidity, again, using stuff from Michael Howard, Cross Border Capital, which I think is great. If you look at that going higher, crypto does tend to follow that. But that's obviously a story for another video. Cycle dynamics, not fundamentals in the traditional sense that value investors look at. So because of this, you cannot value it easily. You can't value it based on those metrics. So this does not mean crypto has no value. It means the tools for measuring it are slightly different. So in this video, we're going to break down some of those tools. So market cap is a good guide. Now, I think before I go into this, you could look at the crypto market cap. It's growing year on year on year. I would also say yes, but I wouldn't make any decisions based on that because you could argue the market cap is inflated. Like some of the market cap will be made up of coins which are never going to make new all-time highs. You look at Cardano at the moment. You look at Sandbox. You look at all these coins that are just done. They're just finished. But they're going to have high market caps. So you could say these coins are just going to prop it up as new ones come along and then probably join the rubbish. And as Bitcoin goes up, it's going to be also propped up by these things. And then they're going to have spikes here and there, short squeezes, whatever. But the market cap, you could say, yes, it's a good guide, but it's also going to be inflated because some of this rubbish is never going to make a new high again. So where total market cap sits relative to previous crypto peaks, and troughs gives you index, right? So it gives you context. So in a stock market, bear market, the total crypto market cap will likely fall. It is an objective number and not an opinion. So the market cap, again, is a good thing to look at. There's total, there's a total 2, then there's total 3. You can look at these things, but I would have the inflation thing in mind. But the market cap can be a good tool. I think one of the most interesting tools is stablecoin market cap. So here I've got a chart of Tether, Circle, and DAI, and it's at all-time highs. And over time, it has gone up, and in bear markets, it has gone down. And typically, you could argue when liquidity in crypto is up, this is going to be upwards. So a good way you could look at it is maybe if it's trending on the weekly, I'm going to be more aggressive. If it's not, I'm going to be less so. Now, there in 2023, it kind of just went flat and price went up. So again, not much there, but sustained run there. And then it did go down, and it's kind of, fallen here. So stablecoin market cap is at all-time highs. So capital, again, when it's, it could also be another thing for people sitting on the sidelines as well. So, that's, again, another thing to talk about. But it's at all-time highs and it's going higher, kind of moving forward. So, again, it's something to, think about. Again, something to consider. And look, and you can see here, people hit, the top around there. People are taking profits, it's going up. And then people are taking money out of crypto, it's going up. People want money, and then now they're taking money out of their stable coins. But this looks like a bit flatter. But again, a good way to view adoption, I think, from more of an objective standpoint, because people are having stable coins, they're using stable coins typically, but taking money out. So whether that capital deploys or not stays on the sidelines, yeah, it's something that we cannot predict, but this could be a good way to view that adoption. If it's already dropped 50%, how much lower can it go? So Bitcoin is like 50%-ish off its highs. If something has already dropped, or has already fallen 50%, does it need to fall another, 50%? Is that going to happen? Is it going to half again? In stocks, in the stock bear market, crypto has, already fallen. So crypto has already dropped. The stablecoin market cap tells you, again, like, people are now converting their profits into stablecoins. I think when it does come to this one, like, it's always good to look at, like, when you're shorting something that's already down 50%, you've got to think how much lower can it actually go, because, it's already beaten down so much. And I think that's where we're at with crypto. So could a stock market bear market be in sight? Well, if it was going to be, crypto may be lower. So again, if it's already dropped 50%, how much lower can it actually go? And the stablecoin market cap is a good guide. And yeah, crypto has fallen 80% before in bear markets. So you've got to remember that as well. So look, crypto is difficult to value. So in terms of, if we go back to the start, if we go back to, if they were to crash, where does that leave crypto? You've got to view it as its own thing. Right, you've got to view it as its own thing. You can look at stable coins, you can look at the total market cap, you can look at these things. I would try and view it as a different thing. I do think, if something's making new weekly lows, disregard it. Why are you investing in that? Cardano, a great example. Just get out. Like, what are you doing? If it's making new weekly lows, there is literally no point. It's not coming back. It's not making an all-time high. Yes, it might have a huge rally, huge short squeeze, but leave it. But anyway, going off a bit of a tangent there. Crypto is difficult to value. There has no earnings, which makes it different to stocks. The stablecoin market cap, again, can tell people that profits are taking place, and people have dry powder. People are sitting on the sidelines, and it can also say there's more activity in stablecoins. So that's definitely something to view as well. And stablecoin market cap, is at all-time highs. It keeps going higher and higher. So people do have money in the crypto ecosystem, so it is being used. So for me, don't worry about valuing it. View it completely different. Charting probably is the only way to do it, because you can't value it. Stablecoin market cap, again, another guide. If you don't want to keep updating markets with crypto, stocks, wherever it may be, I do have a free newsletter. Link to that will be in the description. See you in the next one.